Hello, this is Professor Bolt with a test review for Exam 2, Managerial Accounting, Fall 2019, and we're covering Chapters 4, 5, and 7. This test review is meant to give you a way of focusing on the things that are important, but also understanding that this is more of an analysis and analytical type of exam as opposed to let me memorize some formulas and see if I can run through this information. So we have 3 chapters, one on process costing, one on cost volume profit analysis, and another one on activity-based costing. Very quantitative as well as definitional. We have done a lot of sample problems in class. We've done worksheets. We've done sample multiple choice questions to give you an idea of the types of problems that you need to solve. And you've also done a lot of homework and quizzes. So I believe that you are prepared, given the wide variety of assessments that you've had to date, and given the extra time that we've spent on these areas. I believe that each one of you is prepared. I saw those quiz grades go up tremendously with the chapter on activity-based costing, and so many of you have been emailing me in the past few days saying that you're studying and you had questions, so that's really encouraging. I want to remind you that this is a memorize and an understand college level class, which means that we start with some analysis. Sorry, let me back up. We start with some definitions. For example, do you know the definition of the contribution margin? Do you know the definition of a variable cost versus a fixed cost? What about a variable cost per unit or a fixed cost per unit? Can you take those definitions and apply them to a scenario? But further, and this is where the college level really does come into play, can you take the definition of a contribution margin, understand a contribution margin income statement, and if the calculation tells you that sales have increased 10%, what's going to happen to the break-even point? Can you follow through with understanding the definition, applying the definition, doing the quantitative components of it, and then coming up with a correct answer? So this type of detailed analysis is so crucial in the accounting profession and in the business world, because you have to understand what's going on within your company, within your business, within your organization, and you have to understand how to analyze the what-ifs, not just apply a formula, but what if this changes, or what if we go from a plant-wide to an activity-based costing predetermined overhead rate where we use numerous activity rates. So there's a lot of information in here, but each one of you has the capacity to do really well on it. So let's get started on the handout sheet that I provided for you. I've changed around the order a little bit. Actually, before I do that, let me go through the exam that I actually have in front of me. Let you know what we've got on here. There is a break-even point problem that you'll be calculating, and there is also a full chart of calculation for equivalent units, the exact same template that you used in class on Thursday after the guest speaker that we had from Dixon Hughes Goodman, where you're calculating the cost of one product and you're calculating the equivalent units to be able to determine what the cost of one product is. I've also got a couple of quick problems to see if you can figure out how many units are transferred to finished goods, or how many units were started during the time period that we're looking at. After that, we're going to be covering 31 multiple choice questions. I know they're not your favorite, but if you can look at a multiple choice question by covering up the 4 options and seeing if you can answer it, if you don't know what the options for the answer are, that's one good strategy when you're doing quantitative multiple choice problems. They're no different than fill in the blanks or open-ended questions, just that the benefit is that you might have a 25% chance of getting it right if you're not sure what the answer is. There are, as we talked about, some definitions in the multiple choice and true-false questions, but there are also some calculations. and they all relate to the handout, the template we're getting ready to go over as far as the study guides go. I've tried my best to heavy, bold, and underline whenever I know that there's crucial information you need to focus on. As you know, in all problems, you have to figure out what is the important information to solve this problem. You're going to be given more information than you need, and that's the way the real world works, and that is that the real world is not going to say, hey, we're glad that you're at work today. We'd like you to divide this number by this number and come up with the answer for us in the next hour. Instead, you're going to have that basic template and some analysis based on changes in your organization and what ifs and what would we do next. So as I flip through the exam, to me, we've gone over all of the information that we've had in here, either here on quizzes, on homework, on worksheets. So let's get started on the handout that I provided that tells you core areas to study. I always have to give a quick disclaimer, and that is that this doesn't cover 100% of everything. Obviously, there's going to be areas that aren't listed, but this is a good place for you to start. And remember, too, to focus on the PowerPoints and the quizzes that we've given. Remember, you can go back in and look at quizzes and homework after they have concluded to be able to help you to see what you got wrong when you did the quiz or the homework. And the homework for Chapter 7 is due tonight, as is the last quiz for Chapter 7. And I reopened Chapter 5's homework. That, too, is going to be due tonight. Tonight being today, as I am the day that I am recording this, which is Sunday, October 27th. So for process costing, we went through this in class the other day. Process costing is different from job order costing. Reminder, we are using FIFO. So go back in and look at the definitions of process versus job order costing. When we talk about costs flowing in process costing, we're talking about the fact that we have direct materials, labor, and overhead that flow into each of the processes or departments. And then each process or department transfers items finished, units finished from that process or department into the next one. So it's a constantly building process. We have numerous work in processes. From there, after it's gone through all the processes, maybe it is mixing, baking, and packaging. After packaging, it will go to finished goods, and when it is sold, it will go to cost of goods sold on the income statement. That is a question on the exam to ensure that you understand a little bit about the cost flow. We talk about separating conversion costs and materials. I want you to look that up. That's a question on the exam. Calculating equivalent units is a question that you will be calculating as a big problem, as well as the per unit cost and process costing. Last reminder, and that is that there is a problem that you can print out on SitLearn, Chapter 4. It's manufacturing toilet paper, and once you finish it, you can watch the video that shows the solutions. If you don't try it on your own, and if you just look at the video, I can assure you, you will not do as well, because you will not have gotten the experience of a practice without knowing what the answers are. Cost volume profit analysis has some basic core information, but a lot of students get really confused when we talk about the difference in per unit versus total. So typically, total costs are going to be bigger. Per unit costs is according to what we're producing. And in cost volume profit analysis, per unit costs will generally stay the same for a variable cost, but they go down the more units that are produced under fixed cost. Let me remind you to look that one up, because that seems to be an analysis that many of you get confused. Again, that is, variable costs stay the same per unit but get bigger the more units produced. Fixed costs get smaller per unit but stay the same regardless of the number of units that are produced. That's something from Chapter 1, and it is still an important concept as we go through chapter 5. These definitions we've talked about many times, so I will let you look them up and look at some of the calculations and problems that you will be doing for them. If you've got any questions, most of these are all pretty well defined within your book, and I will encourage you to take a look and try some sample problems. Okay, I took a quick break there in my recording because I wanted to pull up a problem for you to look at regarding this last piece, calculating the break-even point for multiple products. We didn't get very much of a chance to talk about that in class. It's a moderately difficult problem, and it's one that you did on your homework. So here's an example of a company, the Sunripe Company, and they sell 2 types of beach towels. One of them is standard, the other's deluxe, and they show you the total sales and the total variable expenses here. And you have to calculate a weighted average contribution margin ratio. So it's really pretty simple, but if you look at it at first, it makes you confused and you think of it as complex. You simply add up the 450 plus the 50,000 that I've done in highlights here. And so now we have $500,000 in sales. The variable costs are $380,000 for the 2. And if we divide those, we take the 380 divided by 500, and we come up with a ratio, we take the 380 minus, the 500 minus the 380. Sometimes it's hard to record these and I have to start all over again, but let me back up a minute. Add together the total sales. Subtract from it the variable expenses, which means 500,000 minus 380,000, and you come up with $120,000 total contribution margin. If you divide that into the total sales to figure out your contribution margin ratio for the combination of the 2 products, it is 24%. And if you take $57,600, which is the fixed cost, and divide it by 24%, you'll come up with the solution, which is $240,000. So let's look at it down here, which is a little bit better than me trying to tell you by audio. Adding up the combination of the 2, dividing them to find your contribution ratio just as you would if it were a single product, and dividing the fixed expenses into that contribution margin as we're used to doing, and you'll come up with the solution, which is $240,000. As you can see, this is an analytical thinking, critical thinking type of problem, and I wanted to give you an example to make sure that you knew what you were doing when you get to that on the exam tomorrow. So let me back up now. We've talked about cost, volume, profit analysis. Finally, we're going to talk about activity-based costing, knowing that it is a more expensive but more accurate way of determining the allocation of overhead costs, and we found that overhead costs in activity-based costing can be both manufacturing costs and non-manufacturing costs. And we find that whenever we use activity-based costing, we're calculating a predetermined overhead rate, which is the same as an activity rate. So the same formula, estimated overhead divided by estimated cost driver, will be used. Cost driver is an activity driver. Cost pool is your estimated overhead. Activity-based costing often has numerous levels of allocation. We talked about unit allocation, batch allocation, plant-wide allocation. And we found that we have to sometimes go through various levels to come up with the answer. So the first thing we might be doing is adding up our activity cost pool as we have here. And sometimes that requires you to just simply add up all of the costs that they tell you are overhead costs. And from there, figure out what the driver is, and that's just a matter of reading the narrative, the activity driver, what it is that makes the costs go up. And that's the same in a predetermined overhead rate or ABC. Once you come up with that rate, you're simply multiplying it times the actual activity. And I think I need to put that one in bold down here. And that is that let me pause this. Okay, so what you're doing is once you calculate that activity rate or predetermined overhead rate, you will multiply it times the actual use of the driver. How much did they actually use in machine hours, or how many batches did they actually make? How many orders did they process? And so as you're doing this problem, you have to be clear in understanding what the problem's asking and in reading the information carefully. The most important part, I would say, as we conclude this, not the world's best, but hopefully helpful review, most important thing that I can say is that this is the type of problem that you need to ensure you are well rested, that you've studied in advance. It's not a last-minute cram session. You have to understand that you come in prepared. I know that Tuesday mornings, I think you have PT, maybe not. But just be sure that you're clear-headed, not over-caffeinated, not sleep-deprived, and that you've studied. Accounting is one of those courses that for some students it's just automatic, but for most students, and that's me included whenever I was an undergrad, it takes quite a bit of time to study. I would say even if you've done all the homework and if you've been following very carefully in class, you've still got a couple of hours per chapter to ensure that you understand it so that you can do the analysis required for success. My goal is that everyone is successful, and I wish you the best of luck as you're studying. Please reach out to me if you have any questions, and I will see you Tuesday.